What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Happy Monday. Of course, Monday is Bitcoin Fundamentals Report Day. I've been putting that out for about 5 years, and we come out every week with a broad update on Bitcoin and macro, being Bitcoin and markets. So we touch on everything from the price to the headlines to mining sector, layer two. We when there's important news, we cover that, but we also cover macro news, big into looking at the broader economic situation. We talk about globalization, demographics, China's economy, trade, all of that stuff. So welcome if you guys are new. Welcome to all the people returning. I am going out on Telegram. That's my home base for my community. So you guys can check out t.me/Bitcoin and markets. Also going out on YouTube and Rumble. So welcome, everybody. Let's dive right into it. Let's get the right tab here. Bitcoinandmarkets.com. Go there and sign up for the free account. You'll get this free newsletter every week. And number 274 is what we just came out with. So let's open this up. Zoom in a little bit. I always start off with a meme. And right now, I think we need this out there in Bitcoin land. HODL. We really do have to HODL this big launch of the ETFs, the biggest launch in the history of ETFs. Bitcoin is literally taking over all the record books for traditional finance. But for some reason, the price is dipping. I mean, we kind of know the reason. Grayscale is selling a lot of Bitcoin. But that can't be all, because it's net still 27,000 Bitcoins net have come off of the market. So the other ETFs are still out buying how much GBTC is selling. But we just have to wait through this period, HODL, maybe stack if you have some dry powder, stack a little bit on these dips. It's always a good reason, or it's always a good idea to just stack the dips, especially if you start getting in a dip in Bitcoin over like 20%, then that's a really good time to stack dips, especially in a bull market. Okay. A snapshot of Bitcoin. Weekly trend is just worrying about ETF flows. Okay. There's a lot of stuff going on about that. The biggest articles today I saw were about FTX selling. We're going to talk about that here down below. And everyone has their own opinion on what's going on with the ETF flows, and I'm no different. Okay, media sentiment is positive. It was very positive for leading up to the ETF. This ETF kind of let down, I think, has affected some of the feeling out there, or the media coverage, the sentiment from the media. So I've put it down to positive. Network traffic is moderately high. Fees are down, which is something that I wasn't expecting with a 500 megabyte mempool, but I moved it down from very high down to moderately high. Mining industry is stable. We will take a look at that in the mining section. Days until halving under the 3-month mark, 86 days. So the halving is coming. If you're new to Bitcoin, the halving is when the block reward gets cut in half. Right now, I think a quoted inflation rate. Bitcoin doesn't have an inflation rate because it has a cap of 21 million, and we know what that is. So it's just the amount of Bitcoins kind of entering circulation with the block reward. It's a pseudo inflation rate, and I think it's like around 1.8% right now. And at the halving, that's going to get cut in half, even more, down to, what would that be, 0.9%. It will go under 1% inflation rate at the halving, and this is the only asset like that has a fixed supply. The demand can go to the moon, but the supply cannot increase. That is not like any other asset out there. If the demand for oil goes up and price goes up, they just pump more. That's a more incentive to go and pump more oil. Same with gold, same with any asset. Bitcoin is the only one that doesn't do that. I guess you could say that as for like fine art, for a Picasso, there's only one. There can be fakes. There have been fakes of art, great art even, but there is a fixed supply. But that is not a monetary asset that's divisible, and transportable, and you can use it as money. So commodities or anything like stocks or those types of assets, Bitcoin is extremely, extremely unique in that way. 86 days until the halving. Price at the time of writing was 40,500. down 5% on the week since the last report. Of course, it has dipped below 40,000 right now. We will take a look at a live chart here in a second. Market cap dipped below 800 billion. Satoshis per dollar, 24.68. And one finny, which is my denomination I came up with, 1/10,000th of a Bitcoin, is $4.05. Mining sector, previous difficulty adjustment, and I forgot to change the color on this, was negative almost 4%. That is kind of to be expected because we had this cold blast in the United States and a lot of miners in Texas shut off. So there was a significant drawdown in the hash rate during this previous period, and that affected the difficulty. The next difficulty adjustment, we're still 11 days out. We still have cold weather in the United States, so this is going to vary widely, but it's sitting right around estimated to be 0% in 11 days right now. Mempool, 561 megabytes. Now, this is slowing down. The rate of change, we're having some disinflation in the mempool because it was growing at like maybe 100 megabytes a week, and the last few weeks it's only grown at like maybe 25 megabytes. So it is rising still, but it's much more flat. It's almost at zero, and we will take a look at an image of or a chart of the mempool. Okay, what else we got? Fees to get in the next block, $2.04, 36 sats per virtual byte. That comes out to be low priority fee. So this one is to get in the next block in 10 minutes. This is to get in, I don't know what the exact specifications of this are, but maybe in the next couple hours to get into confirmed transaction is $1.93. So you can save a little bit, but it's not that significant. During periods when during some periods, there is a big difference between these two. But for, I think, a vast majority of the time, they're pretty darn close, actually. Okay, Lightning Network. I've been tracking this for, it's probably a year now. This was a pretty big increase this week after a big decrease last week. We're still under 5,000 BTC on the Lightning Network, coming in just under 5,000, but it did go up 127 Bitcoins in the last week. Channels, still under 60,000, but it also increased by 1.4% or almost 1,000 channels. So, nothing's going to fall in a straight line, like I always say. And Lightning Network did have a good week this week. I hope it continues. I really do. I would like nothing better than to have Lightning really succeed. But so far, over the last 6 months or so, pretty much it's come down, 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 down. I think when I started tracking this, it was about 6,000 Bitcoins in there. I don't know what the dollar value of that would be. The dollar value has probably gone up of the capacity, but the actual Bitcoins in the Lightning Network has gone down. Okay, so that's my snapshot of Bitcoin. Let's get into the next section. Is in case you missed it, I do a lot of written content as well as these live streams. So I'm writing for Bitcoin Magazine Pro. Let me scroll down there. And last week's long form post for Bitcoin Magazine Pro was the Bitcoin ETF inflows in context. A lot of people are talking about that. And like I said, everyone has their own kind of interpretation of it. And so that was my interpretation as of last week. Of course, everything is changing pretty rapidly here. For Bitcoin Magazine Pro, I also do two dashboards, a market dashboard and a mining dashboard, looking at different parts of the Bitcoin market. So check out bmpro.substack.com for that. My members, last week you got the Bitcoin ETF's effect on forecasts and global news. I have not written a Proton yet this week. I used to come out with them on Fridays. Then, the writing so much for Bitcoin Magazine Pro, I'm pushing those Protons to the weekend, and I didn't get one out this weekend, but I will probably tomorrow get a new issue out for that. That goes out to the premium or the professional tier on the website. And blog post last week was the business cycle. Is limiting credit the best route to sanity? We kind of covered that a little bit on the Friday live stream, talking about the Austrian business cycle and how it matches perfectly if you have commodity money, if you have sound money backed by gold, silver, Bitcoin, something like that. But in a pure credit-based system, the Austrian business cycle doesn't quite make sense. So I walk through that and give you some of my thoughts. Okay, so that's all my writings. Let's go on to the headlines for this week. Bitcoin ETFs have record-breaking, head-turning first week. So now I think we've had 7 trading days. But the top 4 fastest ETFs to 1 billion in assets are a Bitcoin futures ETF, BITO, GLD, which is, of course, the gold ETF, and IBIT, that's BlackRock's, and Fidelity's Bitcoin spot ETF. So as you can see, Bitcoin is taking over all the top spots. Really, I mean, this is something that I think a lot of traditional financial people, they're looking at the volumes, maybe not necessarily the price, because they understand that there's things going on behind the scenes. People are working things out with how the OTC desks and how they're trading this, how they're sourcing Bitcoin. So they can kind of figure that out, or they understand that a little bit. But they see the volume numbers and they see the overall inflows. And that is really big, I think, for giving Bitcoin legitimacy. But let's see what I wrote here. This is amazing because there were so many spot Bitcoin ETFs launched. Yeah, like if you combined Fidelity and BlackRock together, along with like Van Eck and Bitwise, they probably definitely would be number one. But since there were so many, they individually still got third and fourth here. If you combine them all into one, it's by far the biggest, fastest launch in history. This is a head turning for traditional investors. It is a huge boost to the reputation and legitimacy of Bitcoin as an asset. The timing of in the broader macro cycle is also interesting. It is my forecast that Europe and China are already in deep recessions. And, we can't trust really data out of China, but we can look at like things like their stock market, which we'll cover here in a second, is crashing. Their economic model is over. I think they're in a deep recession. 30% of their economy was these real estate, the big real estate developers, and they're all going bankrupt. So pretty much we can safely say that China is in a deep recession. Now go over to Europe. The largest economy in Europe is Germany, and they had a negative GDP print for the year 2023. But they just didn't go into recession because one of those quarters was 0%. So by their textbook definitions, they didn't meet for the definition of recession, even though they had a negative GDP for the entire year. So I think Europe is in a recession, China's in a recession, the US is coming along. We will be in recession probably by the end of the year this year, but yeah, that's my forecast for them. The US and Japan will likely follow in 2024. The Bitcoin ETF and halving are occurring right into the lead up to that safe haven bid. So as you're going into recession, money is going to flow into safe haven assets, bonds or government bonds, gold, things like that. Bitcoin is a safe haven because it has that fixed supply like I was talking about. So this is a perfect timing for a Bitcoin ETF to be launching into this with the halving, going into recession. It's a beautiful, beautiful coincidence or alignment of all of these different things. Placing Bitcoin as a safe haven in recession, not just an inflation hedge. People who understand the inflation fundamentals and call QE, do not, I missed a typo here. People who do not understand the inflation fundamentals and call QE inflation will buy Bitcoin because it's an inflation hedge. So as we go into recession, they're going to start QE again. They're going to drop their policy rate, right? The central banks will, the Federal Reserve and ECB and BOJ and all them. They're going to be stimulating the economy. And people that think that's inflation will buy Bitcoin because they think it's an inflation hedge, which it is. But the real thing that's happening is a deflationary environment. So those who understand more clearly that recessions are deflationary and QE is just a sign of deflation, and that the need for psychological support in the market. So they do QE because the economy is so bad. It's like Emil Kalinowski and Jeff Schneider, they always called it filling a leaky bucket. So if the bucket weren't leaky, you wouldn't need to fill it, right? So it's a sign that the bucket is leaking. And so it's just a sign of deflation that's happening out there. And they need to have some sort of psychological support. It actually is not money printing. But okay, so Bitcoin, in that case, if you understand it that way, Bitcoin is a deflation hedge. So this is a win-win for Bitcoin with the ETF launch, with the halving, going into recession. I mean, everything is aligning perfectly for Bitcoin right now. Okay, Eric Balkunas, I just wanted to put this in here. So he was talking in the context how insane 10 billion in volume is in the first 3 days. I clicked out of it. There were 500 ETFs launched in 2023. Today, they did a combined 400 million in volume. The best one did 45 million, and many have had months to get going. IBIT alone is seeing more activity than the entire 2023 freshman class. So that is what the traditional investors are seeing. It's huge, guys. Okay, next headline. Over 1 billion in ETF outflows was from FTX, or the receivership for FTX, and they're done. So apparently their balance of GBTC shares is now zero. All right. So this was breaking this morning. And I should have linked to the article. Did I link? Yeah, I linked in the bullet point to a CoinDesk article, of course, archived because CoinDesk. I've been the reason why I archive most links to like CoinDesk or Bitcoin.com is because they're enemies of Bitcoin and I don't want to give them clicks. But CoinDesk was bought out by another company. So we'll see. Maybe I can start sharing their links directly. All right. This morning, it was breaking that the FTX receivership dumped 1 billion worth of its GBTC shares when it returned to par at the launch of the spot Bitcoin ETF. So they were stuck. The FTX receivership, they were stuck. Maybe they didn't want to sell at a discount. Maybe there was some legality going on there, but they waited until they got the par value and then they sold all their GBTC once it launched as a spot Bitcoin ETF. That is roughly half the selling of GBTC, which was still not enough to cover the buying from the other ETFs. There was a net 27,000 Bitcoins bought, even with the dumping of GBTC. Alistair Milne on Twitter has a list of large holders and the fate of their balances of GBTC. Remember, when GBTC was at a large premium, these players could harvest the spread by creating new GBTC shares at NAV and shorting GBTC at the premium. They ended up holding a massive amount of GBTC and have since been liquidating. So here's his list. DCG, they hold or held 1 billion. And that status is unknown. Genesis and Gemini, they're fighting over 60 million GBTC shares. Half may be sold at the bottom at a steep discount. We don't know exactly where all these are, but it could be half already sold. Three Arrows Capital, they liquidated at a discount to NAV at the bottom or maybe on the way down. Celsius, they sold all at 25% discount to NAV. FTX, like we just talked about, they sold near par, but they are done. And BlockFi sold at a discount to NAV. So all of these players are sold. The ones we're wondering about are DCG and Genesis. Of course, there might be other whales out there that have a significant share, but are they going to sell? Do they need to sell? Does DCG need to sell right now? Is Gemini going to sell? We don't know. But a lot of these big players are gone. So that's a lot of big sources of selling that are now gone for the Bitcoin ETFs, GBTC in particular. All right, next story. Elizabeth Warren, she gets community noted again. This is just funny. They aren't sending their best to fight Bitcoin. So she's talking about this government report confirms that rogue nations are using crypto, but she means Bitcoin, to dodge sanctions and undermine our national security. And she got community noted. The U.S. Treasury Department's own February 2022 National Money Laundering Risk Assessment report states that fiat is the preferred currency for financial crimes. And if you look at some of these people that she's talking about, they actually like laundered, I don't know, they have some proof, not good proof, but they have some proof that it was 900,000 worth of Bitcoin or something. But the year prior, they got caught for UBS or something, got caught laundering 900 million, not 900,000. So most of this crime does happen in dollars, not in Bitcoin. All right. On to the macro headlines. So if you guys are new to my content, I cover all this stuff. I've been talking about China for a long time. I did a podcast called Fed Watch with Bitcoin Magazine years, previously, and I don't know, maybe 3 years ago now, we started talking about this more in depth. And I've been bearish on China the whole time. Back then, everyone was still bullish on the Belt and Road. The U.S. is declining. Okay, they want you to believe that the U.S. is in decline, when in reality, it's China's model that's coming to an end. Okay, their economic model is over. Globalization is over. And I've been saying that for years. And now we're seeing like the stock market, everything's collapsing over there. So the Chinese stock collapse is accelerating. Shenzhen component index fell more than 3%. China index fell 2.4%. Shanghai composite fell 2.7%. This from Sino_market on Twitter. It's a good follow if you want to go follow them. You see these charts just look atrocious. Also from Sino Market, meanwhile, Chinese investors are rushing into Japan and US ETFs despite stock routes in China. And this is another thing I was saying is that, there's going to be capital flight out of China and Europe too. And where are they going to go? They're not going to go to Africa. It's not going to go to South America. It's going to go to US assets, US stock market. So this is putting a big bid under the US markets. And one reason why they are going to go into recession first, and the US is going to be lagging into the recession. The rest of the world is going to pull the US down into recession. Okay, so the Nikkei ETF, this is traded in China, was up 1.7%. Another Nikkei 225 ETF plus 3%, a US 50 ETF plus 2%, and a NASDAQ ETF plus 2.8%, while the rest of their market is crashing. So that just shows you how everything is shifting. Now, this image is cool. It shows you the Chinese CSI 300 versus the S&P 500, which of course is a US stock market. And look at that difference. I mean, how can you argue with that? China's model is collapsing. Capital is going to flee over to US markets. Pretty darn simple. All right, next macro headline. People are being fooled as expected into soft landing hopes. And I've been talking about this for a long time. Because the macro thesis is the end of a credit bubble and how that affects the cycles that we're in, from the great financial crisis into this bout of inflation that we had after COVID to now this coming recession. Okay, so this is a very it's not even nuanced. It's just completely different. It stood on its head in a lot of ways, my macro thesis, and has been extremely accurate in predicting what's going on. And I said for the last maybe 6 months that people are going to be expecting, they're going to see this pre-recession trade happening. And pre-recession trade is you stop spending money on hiring people. You stop spending money on expanding your business. You don't take out new loans. You have this money and you plow it into savings, into investments, into your 401k, into these other things. And a lot of those are going to be going into the stock market or into US government securities or other government bonds, safe bonds. And so you're going to see a period where the stock market rises and the bond yields are falling pre-recession. And people are going to look at the stock market rising and they're going to be like, whoa, actually the economy must be booming. So see the trick? People are being tricked into thinking that we're going towards a soft landing, when in reality, when you see charts like this, which is the general business conditions put out by the New York Federal Reserve, it is lower than the great financial crisis, the general business conditions. When you see charts like that, but stocks are going up, there is no other way to explain that, in my opinion, than my theory, my thesis on what's going on here. But okay, let's get back to this one. So the percentage of Bloomberg articles that mention soft landing, it is rising. Let me bring up this chart if I can. If I can't click on it, I don't know why some charts don't let me click on them. But you can see this is kind of like a Google Trends, but it's for Bloomberg for the term soft landing. And they seem to peak kind of before recessions. Okay. So this one in the 90s didn't have a recession, but that was LTCM. I think that was in 97. So that was prior to LTCM, and there was the Asian financial crisis at the end there. But you can see the soft landing, everyone always thinks it's going to be a soft landing, and it never turns out that way. It always goes into recession. So right now, it's even, people are confused. There's a lot of volatility in this right now, but it's higher. You have to go all the way back to the dot-com recession. Okay. Where were we? I have predicted that the pre-recession environment of rising stocks and gently falling yields will trick people into this soft landing expectation. Of course, it is just a pre-recession shift from economic expansion into relatively more safe assets. The US market will also be buoyed by disaster in Chinese and European markets as capital flees to the relative safety of the US. All right, next one is that Empire Fed thing here. And I covered this on last Friday's stream, so won't go over it too much. I just wanted to quote from the report itself. The headline, General Business Conditions Index, fell 29 points to negative 43.7, its lowest reading since May of 2020. New orders and shipments also posted sharp declines. Unfilled orders continued to shrink significantly, not just shrink significantly. Sorry, that was my boy. And delivery times continued to shorten. Inventories edged lower. Employment and the average work week declined modestly. The pace of input price increases picked up somewhat, while the pace of selling price increases was little changed. So just really bad look here. Again, the general business conditions are just looking horrible. Look at the 2022 and 2023. We hovered in negative territory. There was a lot of volatility in this. A lot of the methodologies might have to change because of the response to COVID. I don't know, like people's savings, there's excess savings after COVID because of the stimmy checks. How does that affect general business conditions? Well, maybe that's what led to all this volatility. We don't know exactly, but something changed there, and this is very volatile, but you can't argue with how low it has been, and almost certainly we're going into a pretty significant recession. All right, let's get into price analysis. Now, my market protons, those are my professional tier posts that I do. I'll get that out ASAP, but my base case, and I go deep into the charts on that one. I go lots of Bitcoin charts, lots of different indicators. I do commodity charts. I do other types of things. I have my forecasts, my short, medium, and long-term forecasts for Bitcoin. Those are my official forecasts, by the way, on the protons. So if I'm talking on Telegram or something and I make some prediction of a 10K candle, which I have been known to do, that's not my official prediction. My official prediction is on the protons. Those come out once a week. But okay, so my base case is still for 2023 trends to continue into the first part of 2024 in that pre-recession trade, with eyes on March and Q3 for volatility. So last March, if I bring up this chart here, last March was the banking crisis, and I think this March we might have similar. People are expecting perhaps a first rate cut. It's the end of the bank loan. What is it? Bank funding loan program, or whatever the acronym is. That's ending in March as well. So there is going to be some action going on for banking at the end of Q1. And then we have the halving you can see on the chart as well. So this is the 50-day moving average, the simple moving average, and this is the 200-day moving average. So let me read what I wrote here. On the chart above, you can see when price dipped below the 50-day moving average in June and August of last year, it back tested the 50-day before consolidating further. So let's open this up again. These are the red arrows. We dipped below the 50-day, back tested the 50-day, then consolidated a little bit further before breaking out. Same thing happened here, back tested the 50-day before consolidating further. So that's what I kind of expect. I do expect similar pattern. We will back test the 50-day moving average relatively soon, maybe in the next, maybe by Friday, we could even do that. But depending on the ETF flows, depending on what we see from GBTC and the selling, are we going to then continue to consolidate further, or are we going to go break through the 50-day moving average and go higher? The important levels here remain 40,000. We did break that. Actually, let's go to the live chart. Let's do it live. All right, so I stacked a few sats on this dip below 40,000. We are back now to 39,994, almost getting back above that 40,000 mark. We will see how that works out. But this line here, 37,877, comes from back in November. We were watching this for a long time, and then it broke out on December 1st, if you guys remember that. But that's support as well. And that 200-day is coming up. Let's see, where was that? 200-day is down at 33,000. I do not think we'll get down there. This might be the last push, actually lower. The 100-day simple moving average is at 39,100. Didn't quite get there, but interesting that is the kind of adding some support, most likely some bids around or just above the 100-day moving average. So the reason why these moving averages are important, and even horizontal levels are important, because it is a group of Schelling points, So if you know about game theory and about Schelling points, they are just something that naturally attracts your attention. So if I showed you 4 squares and one was red and 3 were green, and there was 2 people, and I said, okay, you can't communicate, but I want you to each pick one. The other person doesn't know what you pick. You have to pick one, and I'll give you $1 if you get the same square. Which one are they going to pick? They're going to pick the red one because something unique about that choice. So that's a Schelling point. It's a natural drawing of your attention. So that's what these moving averages are. It's naturally people are drawn to these parts of the chart, and they're going to place bids and asks around that. You might even do a stacked thing. So let's say you're trying to DCA in over a period of time. You'll put some bids around the 50, maybe some around the 100, whatever, and you'll be accumulating on the way down. I hope that makes sense, but that is why these types of levels are important. Okay, let's go back to the report. And yeah, I said I expect that we should at least backtest the 50-day, but with a higher chance to continue higher this time due to the ETF inflow. So instead of last time when it failed on the backtest, it might not fail on the backtest. That would bring us to 43,150 first, at which time the market has to decide between higher or more consolidation. Tons of mixed metrics on Bitcoin right now. A lot of indicators and a lot of information. A lot of the fundamentals in Bitcoin are very mixed. It's very hard to pick out the signal through the noise. So I just put 3 things here to maybe help cage you and help, not put blinders on, but focus, make you focused on what I think is important here right now in the Bitcoin market and in the cycle here. So Bitcoin has its own cycle, the halving, and it's coming. Bitcoin performed poorly during the COVID crash, but a similar event is not on the radar specifically at the moment. So we've been talking a little bit about this in Telegram, where when there is a crash and a recession hits, are people going to sell the Bitcoin because they are getting liquidated elsewhere? They need the money elsewhere. That is possible, but I don't think it's going to be a replay of COVID for a couple of reasons. One, COVID was a novel, to use the epidemiological term, the novel situation that we haven't had for 100 years of this global pandemic. And so I think it scared a lot of people, and we had bigger crashes than we would have. So I don't see anything like that coming. At least, like, I saw COVID, started to read about it, and I think post on the podcast in December of 2019 about stuff going on in China. And I don't see anything like that right now. Like, there's nothing in the foreseeable future that's going to be like COVID. I know there's talk about this disease X and all this stuff, but right now I don't see that on the radar. So there isn't this big singularity novel market event that's going to be happening in the near future. So any sort of crash is just going to be a typical kind of almost a slow motion. It's going to feel slow motion, and a lot of people are going to be faked out on this, just like they are now talking about the soft landing. So in that type of environment, I think Bitcoin is going to do very, very well. So it's not going to be the same as COVID. What we have today is a pre-recession slowing where stocks, bonds, and safe havens will rise. Okay, so that's the number two thing that kind of helps focus your attention. Bitcoin ETF inflows are staying quite high. They're averaging over 10,000 per day if you don't include GBTC selling. If you include GBTC outflows, it is still nearly 4,000 Bitcoins per day, or $160 billion per day. And we'll see what today comes out to be. But okay. So with the report that FTX is done selling all their GBTC, we should expect those outflows to be cut in half, adding more net buying pressure. We should not be surprised with brief periods of rapid appreciation followed by periods of calm. And that's what I've been talking about for a while. So let me go back to the chart and go to the weekly. I'll take the moving averages off. But you can see since this rally started the beginning of 2023, we have obvious big weeks, right, where the price moves a lot, and then followed by long periods of down or sideways. We should expect that to continue. So we should expect the next rally to happen in a relatively short period of time, taking us to the next target or the next level that we're watching. But we need to be able to not focus on these long-term periods like this right here. Where's the arrow? This is painful. If we were to go through something like this right now, how many weeks is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks of slightly down price movement. That's painful, especially with ETFs launches and the halving coming. This would be painful, but then we would be repaid with a big weekly candle. So this could happen, something like this, all the way up, and then we have a big candle way out here in March. That's possible. But we should expect the returns to be small, like small windows of time. All right, let's go back to the report. That's it for the price analysis. Now let's go into Bitcoin mining. So the hash rate drops 34% amid freezing temperatures in Texas. Bitcoin miners' demand response is getting better each year. Disruptions this year were significantly better, resulting in fewer grid problems during this month's flash freeze. Now, this is quoting from this article. It's a Cointelegraph article. The total Bitcoin network hash rate fell from more than 629 exahashes per second on January 11th to roughly 415. So from 629 to 415 in a matter of 4 days. That's a 34% drop. The analytics site reported the hash rate increased to more than 454 exahashes per second by the 16th. So from 415 up to 454 the next day. However, we can't really measure this. We just measure this by block times. So you estimate it. But there are possibilities that people can get lucky for 10 blocks in a row, and it makes it look like the hash rate is really high when it's just people getting lucky. So there's no way to directly measure total hash rate. As temperatures in Austin briefly rose above freezing during that day. So the demand response here, when temperatures plunged, they dropped from 629 down to 415. Then temperatures got over freezing for a brief period of time in Austin, and we saw the hash rate rise again. Very interesting. According to Foundry's data pool, Texas accounted for roughly 29% of the Bitcoin hash rate in the United States. So that's 29% in the United States. A lot of states are getting cold. We here in Florida got down to just freezing, 32 degrees Fahrenheit. And so I know there's a lot of mining going on in Georgia, which is obviously north of us. So they got down below freezing. So there might have been some pulling back on the Georgia hash rate, and that will expand all around the United States with this big cold blast. So not just Texas, it could be everything. Many mining firms relocated to the state from China following the country's crackdown on BTC miners. Several firms have operations in Texas, including Marathon, Riot, BitDeer, and Core Scientific. Unlike 2021, when record low temperatures and a sudden winter storm caused hundreds of power outages to homes at a time when many roads were covered with ice and heavy snow, there were fewer reports of significant disruptions to Texas's power grid. Beautiful. They're getting better. They're learning. This is the new thing. It's a whole new idea for how to balance the grid, and it's getting really good. Fewer reports of significant disruptions. Many mining firms have joined a program organized by ERCOT that compensates them for adjusting their load on the state's power grid during periods of high demand. Okay, so that's a good story. Next mining headline. Investment firm with $1 billion in assets looks to invest in Bitcoin mining with Fabiano Consulting. So not all 1 billion is going to be going into Bitcoin mining, but I just wanted to include this as an example of, everybody's wanted to get in. There's a lot of interest in investing in Bitcoin miners and in Bitcoin, the Bitcoin industry here. So specialist investment firm DSX has teamed up with Fabiano Consulting to explore investment and strategic opportunities in the Bitcoin mining sector. I like that they say Bitcoin mining and not crypto mining and all that garbage. The firms are looking to be investors and treasury management providers for mining companies that are looking for funding and strategic advice, including expansion and corporate structuring, according to the statement. DSX is a family office-backed investment firm with Tim Grant as CEO and $1 billion in assets. Grant previously held many executive roles, including head of EMEA at Mike Novogratz' Galaxy Digital. So he's coming from the space and the crypto scam sector, CEO of Six Digital Exchange, and he also worked with UBS. Fabiano Consulting was formed last year only by former Bitcoin financial services firm Digital Galaxy, again. The head of mining for Galaxy Digital, and that's Amanda Fabiano, who was previously director of Bitcoin mining at Fidelity. So there's a lot of nepotism going on here, a lot of moving around of these people, but they're all starting businesses and trying to find a niche and exploit a niche and grow a niche. So there is a lot of growth potential all over the mining sector. All right, what about difficulty? Well, difficulty adjusted down by 3.9%, the biggest decline since December of 2022. These types of moves are not unheard of, especially with a cold blast in Texas. Miners have shown expert hash rate management, taking care of the grid and minimizing effect on the network. As of now, difficulty is estimated to rise 1%. And then by the time I went and did the snapshot at the top, it was down to 0%, but between 0 and 1% in the next adjustment in 11 days. Hash rate, The Texas demand response is clearly visible on the 7-day moving average. So if we bring this up, again, this is a 7-day moving average, fell quite significantly. But that is part of the beauty of the demand response for Bitcoin. Mempool has stopped its consistent rise. Like I said, there was it's almost like some disinflation going on here in the Mempool rise. As you can see, the last 2 weeks have been relatively stable, and fees continue to be relatively low. So you can see this period, this year. I mean, let's see, this year started about right here, and it did kind of scream up higher, but now it's been pretty flat for the last 2 weeks, I would say. Not 3 weeks, because we're only on the 22nd, but the last 2 weeks, it's been relatively flat. Very, very interesting. All right, what about inscriptions? After 2 weeks of lower numbers of inscriptions, the last 2 days, okay, I don't think I updated this section. Oh my goodness. I just updated the images. So let's look at the images. Sorry about that, guys. Things slip through the cracks when you're a one-man show. All right, so you can see this. This is a moving average, this dark brown. I don't know what the length of it, maybe 30 days. And it's coming down pretty dramatically right now. You can see these last few days over here, very, very low, around 100,000 inscriptions per day. We did have this spike here. I'm trying to think of what day that was. I think it's somewhere around the 10th or something, maybe the 20th. I don't remember. Anyway, there are these spikes. They were all the way up at 400K, but they have since come down again. Inscriptions are, they're competing for block space. You have to pay the transaction fee, but then you have to find a seller. So you can mint these, but are you going to spend $1,000 minting something that has no value? No. And I just saw somebody on Twitter was putting like OpenSea, and their trade volumes have pretty much gone to zero. There's no real demand for NFTs. But there is some kind of like hobbyist demand, but hobbyist demand, you're not going to be spending hundreds of dollars on this stuff. A hobbyist demand is like $5 trading cards, So the market will not be able to support this. Long term, this will not happen on Bitcoin because the fees will just be too high. If the hobbyist demand is $5 trading cards and fees are $5, it's just not going to happen. You can maybe trade them on Liquid or something after you've minted them, but still, that $5 fee compared to the face value of that NFT or the value of the NFT is going to make this economically prohibited. All right. Next chart or next image here, chart, is showing the fees spent on inscriptions by week. You see, we had these huge weeks, around 30 million spent 2 weeks in a row to mint these silly things. And now it's down to about 5 million, 5 million, 10 million, 5 million. So that's how much they're spending every week on these relatively worthless things. So we'll see if they continue. But that is it. Let me take a look at the chat. That is it for today's newsletter. Dex Invictus back with us. Thank you, buddy, for hanging out every day, putting a comment. If you guys are watching live on YouTube or Rumble, put a comment down below or a question, and it should come through my streaming software. I'll be able to see it. I'm not an expert at this. Let me see. We got a comment in here. What is Barry up to these days? This is from Rand. Which Barry are you talking about? Are you talking about Barry Silbert? I don't know, man. He quit at Grayscale, right? And DCG. He quit. I don't know. He's laughing on his stacks of cash or something. I mean, this wasn't his first thing, He did Second Market, I believe, was the name of his other company. And it was like a derivatives trading platform. So he was already a multi-millionaire. I don't think he was a billionaire before he started Digital Currency Group, but Yeah, he's not doing too bad for himself. Unfortunately, I mean, a lot of people don't like him. He's probably not a perfect person, but none of us are perfect, right? I don't think he has been extremely scammy. He did support the 2x movement back during the scaling debate. He was kind of he tried to get this New York agreement together to find a solution, a negotiated solution between major parties for the scaling conflict. That was pretty bad, but I wouldn't put him in the same realm as like a Brian Armstrong or a Eric Voorhees or Vitalik or Charles Hoskinson. Who else? Daniel Lammer. Some of these guys are absolutely nasty scammers. I don't put Barry Silbert in that same category, but maybe I'm wrong. Maybe I'm not reading them right. Never met the guy, so how do I know? Okay, let me check any other comments. Nothing. Let's go to taking a couple days off, MJ. I took Wednesday off last week. Yeah. I don't plan on taking days off, but writing, since I'm doing more writing for Bitcoin Magazine, instead of doing Fed Watch for them, it does take a bit more of my time. So sometimes I don't do a live stream for Bitcoin and markets. Um, but yeah, I'm trying to pump out as much content as possible. I very rarely take days off. I ask my kids every once in a while, can dad have a sick day, please? I'll just take a sick day. But of course, that doesn't happen. But that's cool. I love hanging out with the guys on Telegram, love keeping up with all the macro stuff. So, all right. Well, that's going to be it then for today, guys. Thank you for joining me. And check out bitcoinandmarkets.com. If you're new, follow on YouTube, Rumble, join the Telegram at t.me/Bitcoin and Markets. Follow me on Twitter at Ansel Linder, and I'll see you guys on the next one.